We welcome our SABC News Channel viewers. Let's take a look at your markets now. Asian markets rose on Wednesday as new tit-for-tat tariffs by China and the United States were seen as lighter than feared, while there are hopes the two sides will eventually avert a damaging trade war. Donald Trump on Monday said he would press ahead with 10% levies on another $200 billion of imports, prompting Beijing to target $60 billion of U.S. goods with 5 to 10% taxes. The developments are a clear escalation in the month-long standoff between the world's top economies, but analysts said dealers have been expecting the measures and essentially took the lower rates as a positive sign. Tokyo's Nikkei gained over 1% at 23,672, while Hong Kong's Hang Seng Index rose 1.3% to 27,437, and the Shanghai Composite Index also ticked up 1.1% to 2,730. Wall Street rebounded on Tuesday in a broad-based rally as investors brushed aside intensifying trade rhetoric between the U.S. and China. The Dow Jones Industrial Average rose 0.7% to 26,247, while the S&P 500 gained 0.5% to 2,904. The Nasdaq Composite Index was 0.75% to the good, closing at 7,956. For more on the markets, we cross to Arabile Gumede. Take us through what's happening at the JSE today and what's that red behind you?
Yeah, look, quite a bit of red, as you said there. 0.1% down for the JSE as well today. That market movement picture isn't the one that we would have probably expected, having seen the highs of around 60,000 points a little bit earlier on this year. We're also taking a look at the rand, now at 14 rand 73, so perhaps some impetus coming through on that front. But what exactly is driving markets? We'll unpack a whole lot of that in just a moment. But the European and local markets, let's take a look at how that's faring. Well, Makwe Masilela from Makwe Fund Managers joins me now as we take a look at the market picture. Makwe, thank you so much for your time. A bit of a negative market picture to start off with, 0.1% down. Is there any real impetus coming through? Is it the trade war stuff? What actually is driving the market?
Unfortunately, with us, it's a stronger rand, and it's supposed to be the opposite. Hence, we see our banks are doing okay, but you check our industrials, which are more rent hedges, are doing so bad. You get your likes of Richmond down almost 4%. And compared to what happened, overnight in the US, what happened this morning in Asia, what's happening currently, in Europe, you can see that these other markets are shaking off all this whole issue of the trade tensions that Donald did this and that, and China did whatever. But I think the markets are getting a sense that China, they're prepared to put some stimulus because they're trying to lessen the blow when it comes to these trade tariffs. So unfortunately with us, a stronger rand tend to be negative for rent hedges, which are mainly industrials, and gets to benefit our financials, which are mainly the banks.
One of the stocks that is pretty much a proxy for how the JSE closes is Naspers. It is down by almost the exact same margin as the JSE All Share itself. It's down 0.1%. That was a little higher considering last week's move. I think it was on Thursday or Friday, and even earlier this week, announcing, of course, that there will be unbundling and listing multi-choice separately. How does that make the market tick?
I think for them to do that, that kind of closing the gap, you know, that people have been complaining about, you know, when it comes to their 10-cent value. And the market's kind of like that, you know, because now the guys will now unbundling, people will realize value. I mean, you just check, you know, I mean, multi-choice itself. If the guys, they've got their workings correctly, that's a stock that maybe can be evaluated at plus minus just under 90 billion rands. But unfortunately, it doesn't get to reflect on the price of Naspers, including in other things that they own, the Media 24, stuff like that. But now, the minute they start unbundling that, then that will give a clear reflection and people will manage to realize value. And on top of that, the likes of multi-choice, they're not even paying us dividends because dividends gets to be paid at the higher level at Naspers. So by unbundling, I think that should be positive for the stock and for anyone who's holding Naspers as we're talking.
Is it value for the JSE? It could even potentially go into the top 40 at that rate. JP Morgan even saying that it's at 120 billion, perhaps that value. So as you say, between 90 and 120 billion, is it value for shareholders who decide now they're going to get into a stock like MultiChoice?
Definitely it is, because now you're giving that, without comparing the likes of Netflix. Netflix, you know, is doing okay, pricing wise, but unfortunately you need reliable data or internet, and most people back home don't have it. And the offerings that the MultiChoice have, they still manage to attract almost all sectors of the market, even though people who go around installing those dishes, they will tell you that probably half of them are not working, but you won't know, because if you fail to pay, they just stop it, they don't remove it. But there's still value in there, and African markets should pick up going forward. We know they've been impacted in the sense that they're not doing okay, those economies, because of the negative oil prices.
1465 now. A few people might say it's because there's a better than expected CPI number that came out at 4.9% compared to the 5.2% that was expected by some economists. Would you say that is the mark? Would you say that the rand perhaps has been oversold anyway, and it's about time that it fights back somewhat?
It's about time. I mean, the currency has been down almost 17% this year against the dollar. But if you realize it started strengthening even before the CPI numbers, at the back of what's happening with emerging markets, the likes of Turkish lira, they've been strengthening, and all getting their cue from the fact that China stated that they're not going to undervalue their currency, and on top of that, we expect them, you know, to start stimulating the economy. And I think this time they'll preemptive measures. They'll make sure that it's more direct. They're not looking into changing the whole macroeconomic policies, but they're going to be more direct. I think that itself has given call it maybe a risk back on the whole thing. People starting to have appetite that, okay, here's China, and probably they're happy to start stimulating the economy to lessen the blow that might come out of the current trade tariffs.
Yeah, I think that conversation itself will be very, very interesting. If you continue that market movement, also take a look at where the rand sits now, and you take a look at where things like CPI come out, 4.9%. That figure as well will bode well, even though the Reserve Bank may not look at it per se for tomorrow, but it does bode well for where the trajectory of CPI is headed, right?
By all means, because the guys will be looking more at inflation expectations, and we know they're comfortable with anything around 4.5. But yes, to see CPI going down, and bear in mind that market expectation was anything around 5.2. So that itself, you know, it removes some pressure from the guys when they're making a decision tomorrow. Though at some point they indicated that if the second round effects gets to be seen into the market when it comes to inflation, they might have to consider increasing, even though economy is not doing okay. So they have to strike a balance between all that unfortunately our economy is not yet doing okay. So they have to cushion against that. So we hope they're not going to move.
Look, growth isn't their mandate, but they do consider it, and they make note of that, right? 17 months within the Reserve Bank's target band of between 3 and 6%. But at the same time, you have the emerging market sort of crisis, if you want to call it that, Argentina and their peso and their interest rates. Plus, of course, you have the Russian ruble, Turkey, etc. Do you see the Reserve Bank hiking or keeping rates the same tomorrow?
Keeping rates the same tomorrow.
That is a bold move. We'll certainly see what Lesetja Kganyago decides on when we get into that decision tomorrow at 3 p.m. We will have it for you live on SABC News, so do tune in for that. I will definitely take care of that announcement for you. Will he hike or will he keep things the same? That is the question.